WeWork basically paring back some of its business in New York and London. It wasn't necessarily a surprise to me that this happened. No, you're like, yeah.
WeWork has been an urgent restoration project, right? They're trying to sweep out the excess, focus on the basics. They've got some new financing. They're trying to right the ship. But, this is not the only SoftBank-backed business where we're seeing a lot of visible change. There was a headline yesterday, SoftBank.
Pizza place?
Yeah, SoftBank-backed pizza maker stops making pizza.
Mm-hmm. And
that's possibly not good news.
Cutting hundreds of jobs. There are a lot of really interesting SoftBank stories that are right on the horizon. DoorDash, I think, is maybe one of the top of them because we are waiting a potential IPO. They're also a big unprofitable company, leader in the food delivery service. And so, but like WeWork, they spent a lot of money to grow, and they're pulling in a lot of money very fast. And so is there a lesson learned in the last time around with the WeWork debacle that we can learn into this DoorDash one?
It's clear that there's a reordering of priorities at WeWork. We're focusing more on making money instead of focusing on insane growth. But the unfortunate fallout of that is when they're changing tax, there is going to be a loss of jobs, and that is never a pleasant situation.
Well, also, not to mention the fact that then upstart companies, not even the ones that are established, quote unquote, like a WeWork or a DoorDash, they're not going to be able to have access to that kind of funding to really then grow at any kind of rate.
Well, what's interesting is, so WeWork, yes, and SoftBank and the Vision Fund have raised lots of money, but others have raised a lot of money, like Blackstone for a growth equity fund, KKR, Tiger Global has been really into this private market space, Dan Sundime, and a lot of big sovereign wealth funds and big government capital pools. Temasek is another, the Singapore sovereign wealth fund. So
Yes.
So there is money still flowing in. It just is all coming from SoftBank.
There was a great line in the story yesterday that I'd like to read out, which I think is a lesson not just from the SoftBank perspective, but a lot of the people who are putting money into venture capital, right? They're known for showering companies with far more cash than they're seeking to raise. The Vision Fund's strategy is to anoint a category leader that no competitor can catch up with.
Right.
That's worked in some cases, but there have also been quite a few high-profile casualties.
And the flip side and the upside, then you can get like a Blackstone that can go buy something or invest in a lesser valuation, which is not a bad thing.
We talked to a company this week, Vivint, who had done a SPAC. They changed private equity hands 3 times. They went from Goldman to Blackstone, and now Blackstone and Fortress, and they're going public through a SPAC, which is keeping them in private equity ownership even in public markets. And so that's a different model. It's actually Fortress is part of SoftBank also, but you're seeing people able to kind of keep the money coming in
different ways.
You'll never be bored in the world of finance.